Hey everyone, Adam here. I just wanted to throw out some quick thoughts on markets and what I'm seeing right now. Obviously, the focus is on bonds. The 10-year today at 451%, getting right back down to a range I thought we'd carve out maybe in the 450 to 480 range. We had an auction today. The market was thinking kind of 4.511%, came in at 4.519%. So a little bit soft there, but certainly right at the bottom of that range, and that's real money. Thinking a lot about whether this squeeze lower in yields was technical or some positioning squeeze or some derivatives. It's not looking like that. Real money continues to hit those bids, and that means we probably have a high in yields for the cycle. You know, a month ago we were talking about 6 or 7% in tens, and now it looks like this is it. And we're seeing more and more money kind of pour into that. And a lot of that seems to be working its way into the U.S. The dollar's been strong here despite lower yields, despite this auction, despite a lot of good risk trades. I mean, we're working on 8 days in a row higher in the NASDAQ. Looks like it's going to be a softish finish today, but still that's a very positive risk backdrop. Yet we have Aussie lower 3 days, CAD lower 3 days, Euro lower 2 days, maybe a little bit higher today, cable lower 3 days in a row. So worried about that a little bit, but I still think dollar is set up very well here to run for some time. Next, thinking a bit about oil and what it means. Obviously, some of that give back in yields is because of the crude oil complex. Where would we be if oil was at 85 instead of 75? Maybe we would be closer to that 475 top of the range. And the Fed and we'd be pricing in fewer rate cuts for the Fed. Right now we're around 86 basis points for next year, and that's down from 100 since we've had this kind of risk bump up, or since the Federal Reserve decision and the non-farm payrolls report. We have seen a bit of a Fed pushback on rate cuts, but it hasn't taken in the market, which makes you think some poor data is coming. Looking at inflation, CPI is obviously leaning a little bit lower here. That's the big one for next week, because for the rest of this week there really isn't too much to get excited about on the economic calendar. So we'll go with the ebb and flow from here. But for right now, and the signals so far this week have been pretty positive for risk trades and the dollar. As tough as that is to go with, and a lot of that's really coming through in dollar yen, which is pressing the top of the range here, and I think we can get up to that high 151 level and retest that and see what the officials in Japan are going to do next.